The Central Bank of Nigeria is expected to conduct a treasury bills auction of 150 billion naira today, but traders at Access Bank say they expect a predominantly quiet market today. Constance Onyia, a fixed income dealer at Access Bank, joins us now to give us some perspective on the fixed income and forex market. Constance, thank you so much for your time. First of all, let's preview that 150 billion naira bond issue. What have we learned over the last week about the appetite of investors ahead of this bond issue?
Okay, thank you very much for having me. So going into the fixed income market, where we've seen the DMO offering a total of 150 billion for today, investors' appetite coming from the past week has been that the market has been bullish. So the previous auction, let's go back to that. So the previous auction was on the 1 year, which is where you usually see the bulk of the subscription, closed at 7.2. And in the secondary market, this went on to trade as low as 6.4. And that means that there was a lot of demand. It was a bullish market all through last week. And then for this auction, we also see that on the 1 year, we'll have like an oversubscription because there's still demand in the market outside the maturity of the 150 billion that we have today. So there was an almost maturity earlier in the week of 93 billion, and the CBN only sold about 40 billion out of what matured. So we still see that there's a bit of funding gap, which people will still have to cover at this NCB auction. So we're expecting that the rate will come down from about 7.2, maybe close at 6.9 levels today.
All right, let's touch the forex market. I think that's really important to talk about. So anytime we see weakness with the naira versus the dollar, I think people get concerned, especially in the context of the huge buildup we've seen in the forex reserves recently. What exactly is the... Can you just describe to us what is at play in the market right now?
Okay, so yesterday CBN intervened and sold to FPIs, and then the rates inched up to close at 443 on spot and 452 on forwards. Okay, so we're just liking that since we've seen more demand in that space, but the CBN, knowing what they're doing as well, will continue to manage that space with the FPIs. NAFEX also closed at 422.17. So for the FX market, we've seen that, there's been the continuous intervention by CBN, but we've also seen that the demand is also there. So but I know that the CBN will continue to manage and do what they can.
You mentioned that there's still demand, but would you say that the demand has increased, maybe because some are looking at the capacity of the central bank to come to the table and provide dollars now? Do you think that is causing some people to front load their demand?
It's possible. So in the FX market, you have all sorts of players in the market. You have the ones that will do the forward. You have the ones that will do the spot. You have the people that will just take position ahead of time, depending on what they have. So yes, I want to say that it's probably front loading. It's probably CBN trying to manage people, and then they don't want to come out rightly to say they want to supply all this FX. They really need it. But
right.
As time goes on, they will continue to intervene.
What trends can we anticipate as the year comes to an end in terms of demand and supply from the past? What can you learn, and what can you tell us in terms of what to expect?
Okay, so the CBN will gradually just adjust the rates in the way they see them fit, especially when people try to overreact in the market, not necessarily that you need it. So we always see that towards the end of the year, there's always a huge demand, but most of the time as well, CBN is able to manage that year-end demand that comes into the market. So I think that they will be able to manage it as we come to a close of the year.
All right, Constance, let's leave it there. Constance Onyia is a fixed income dealer at Access Bank.